Hey guys, Alex here. Probably you guys aware that, cryptocurrency, blockchain, NFT, they are disrupting the traditional financial industry. Now, of course, you can invest directly into these, but however, have you ever thought of investing in companies that enable all this technology? Well, today I'll be sharing with you a few case studies, right, that can look into, right, good, great growth opportunity, and at the same time, undervalued that you can, well, take a deeper look into it, right? Now, first company, I believe a lot of you here, you probably aware and you know, which recently also changed the company name, okay? Previously, they called Square, but right now they are called Block. Now, let's take a look into that, right? So let me just do a quick share screen of my VF and take a deeper look into this particular company, okay, via VF, right? Now, let me just search on Square. Now, Square, just in case, okay, if you have no idea what this company all about, right? They recently changed their name to Block, where they actually initially start off with point of sales, right? Where, when you swipe card, the machine, right, that is called point of sales. So they can accept like Visa, MasterCard, that kind of thing. And of course, recently, they also want to venture into blockchain technology. So that's why they changed their name into Block. Okay, so now let's take a look into the company, right? In terms of their business performance. Now, in terms of the revenue, you can see that the revenue is actually growing very, very, very fast. However, do take note that the net income is actually at a, loss-making stage. Now, however, is that a concern? Is that a concern? Now, personally, that is not a big concern for me. Because why? If you look into the rule of 40, now what is rule of 40? Rule of 40 is a benchmark that we see whether a company is able to balance their growth and profitability. Yes, Square is not making money, right? They are losing money. However, because they are growing very, very fast. So the growth and profitability add up should be more than 40. So we can see that on average, it is more than 40 and above. So this is actually a very good sign in terms of their profitability. Okay. Now, however, one thing to take note is the balance sheet. The total debt to equity is pretty high at 1.97. However, they do have a good cash and current ratio, which means what? Yes, the debt is very high. However, it is still backed by good cash position. So still strong. It's still okay. Okay. Now, in terms of the cash flow wise, this is something amazing. Now, yes, Square, they are not making money, right? And yes, Square, the debt is actually pretty high. Okay, in a normal benchmark, we want our debt to equity to be less than 0.5. However, if you look into the cash flow for operation, they're able to generate a lot of cash flow. At the same time, free cash flow as well, right? So that's why, okay, I'm saying that personally, I'm not very worried about the losing profitability. Okay, they are loss-making situation right now, and of course, in terms of the debt, high debt level right now. Now, of course, let's take a deeper look into the risk level of these particular stocks, which we have built it and covered for you under this B risk rating. Now, based on very in-depth institutional level kind of analysis, right? Okay, very, very comprehensive, very, very detailed, okay, which we tell you that Block is actually considered as a high risk stocks. Okay, now some of you might want to ask, why is it a high risk, right? So if you just scroll down, right, there's a few red color here. For example, they have a one-off risk, okay, they have a receivable management risk, okay, external capital dependency risk. Now, if you want to understand much deeper, you can just click on the I button here, info button, right? And over here, we'll explain to you what is going on, right? Now, of course, let's take a look at their star chart. Now, overall, we can see that the profitability is 6 out of 10. 10, of course, the full mark, 0 is no mark. 6 out of 10, well, because at least the revenue is growing. However, as I shared with you earlier, they are not making money, right? They are not making money. At least they are not consistent. Sometimes they make money, sometimes they lose money, right? So, however, the health status is pretty good, okay, and growth as well. Some of you might ask, Alex, how do you determine the 10 out of 10 for health? How do you determine the 10 out of 10 for growth, right? So let's take a look here, okay? So yes, they do have high debt, 1.97 debt to equity. However, as I showed you earlier, right, the free cash flow is very strong, okay? The cash position is very strong. At the same time, the interest cover ratio is very strong as well. So if you don't understand, just click on this question mark and we'll explain to you. So this company is able to service its interest with its current profit does not have to use its cash reserve. So I think that is a very, very good sign. Now, so this V-star chart able to actually help you to analyze the stocks even if you don't have any accounting background or financial background. So knowing that the company risk, yes, is high risk, right? But it is a good growth opportunity. Can you consider to invest? Well, if you look to invest into this fintech company, this is something that you can consider, right? So if you check out the V line, the valuation line, okay, so based on VF, the intrinsic value for Block right now per share value is $254. However, as of now, while shoot this video, it is currently trading at $130, which means it has a 48% of marginal safety, or in other words, 48% undervalued. You know, this really caught my interest, and while researching into this particular company, I saw another opportunity which really wowed me. Why? Because this particular company, right, is also invested by Warren Buffett, Berkshire Hathaway, and Katie Wood ARK Fintech Fund. Okay, now what is this company? This company is very similar like Block, very similar like Square, but it is a Brazil company that is listed in US. So this company is called StoneCo. Okay, StoneCo. So what they do is this. Okay, so same thing. Okay, they provide financial technology to merchants and integrated partners, right? Like POS, okay, point of sales. Okay. So, and of course, if you look into details, okay, in terms of the ownership, you will realize, okay, that Berkshire Hathaway, okay, own 3.5% of this particular company. Now, knowing Warren Buffett is, you know, one of the best investors in the world, right, investing in this company, I believe he sees something special in this particular company. On top of that, okay, Katie Wood, okay, I believe you're probably aware, Katie Wood ARK Fintech Innovation Fund, okay, also invested about 1% into this particular company. So if you decided to invest into this particular company, you are like riding on the giant shoulder, right? So Katie Wood did help you to do the research, and Warren Buffett's team help you to do the research. This basically lower down your investment risk, right? Of course, again, okay, because it is a pretty new company, it's a disrupting company, so the company risk is slightly high, so you can click on it and understand much better in terms of what is the risk. For example, quality of earnings, for example, external capitancy risk. And in terms of the star chart, okay, I must say that this star chart is not the best that I've seen. I mean, comparing to other companies like Square, right? So, but then again, Stone is still a young company, growing company that, well, you might be investing in them at an early stage, right? So in terms of the valuation, it is also pretty undervalued as well. Now, very interesting. Okay, of course, Brazil economy is pretty new to me, right? And I look deeper into this Brazilian economy and Brazilian companies, right? In fact, I found another company, right, that is very comparable to Stone, at the same time perform much better than Stone. Do you want to know which company? Right? If you want to know, give me a yes in the chat. Right. So this particular company, I found it via VF, okay, through the peers analysis over here, right? And this company is called Passeguro. Okay? I'm not too sure whether that's the correct pronunciation, but it's called PAGS, P-A-G-S. Okay. So same thing, is a Brazilian company, fintech company, but it's listed in the US stock exchange, right? So it's also a POS company, point of sales. Now let's take a look at them, right? Key ratio. In terms of revenue wise, the revenue is growing very fast. At the same time, they are profit making. Can you see that? That is something impressed me a lot, right? Now, in terms of net profit margin, okay, is positive making. They are making money, right? Now, in terms of our rule of 40, I hope you will still remember my rule of 40, whether they're able to balance the growth and profitability, right? So in terms of the rule of 40, on average, they're also able to hit 40 and above. That is very amazing, right? Now, next thing is this, balance sheet wise, low debt, okay, almost no debt, 0.01, okay, good current ratio, right? Now, cash flow wise, in terms of cash flow, okay, again, they're able to actually generate tons of cash flow and free cash flow. So this one is really amazing. Now, if you look into the growth performance. Okay, you can see that the growth performance is on average more than 30%, right? And in terms of cash flow wise, it's also growing very healthily as well. So of course, in terms of risk rating, okay, risk rating, this company again is considered as high risk stocks. Okay, so if you want to understand much more in terms of the analysis, you can click into it and click on the I to understand what it is all about. And of course, in terms of the star chart, wow, much impressive than Stone Cold. Yes, profitability very high, health level is very high, growth potential also very high. And what's interesting is this V score is actually scoring at 74. Now, what is this V score all about? Full mark, 100 of 100, right? 70 and above. In VM, this is considered as good and great company. So for beginner out there, if you want to actually start invest, right, I strongly suggest that you go for companies that has a V score of 70 and above. Okay. So now, can you consider to invest in it? Well, if you want to invest into fintech companies that is currently disrupting the traditional financial industry, this is something that you can consider. In terms of the valuation wise, let's check into V line. Okay, so based on VF, okay, based on price to sales valuation method, its current intrinsic value is about $49, where the share price right now is trading at 20 to 21 US dollars. Well, these three companies is something that you can put inside a watch list and take into consideration. Well, if you want to invest into fintech companies that's enable the cryptocurrency, enable the blockchain and NFT space. Okay, so I hope that my sharing actually benefit you today, right? And thank you so much, everyone. I'll pass the stage back into our Singapore office. I will see you when I see you. Bye, guys.